Well, let's start with that. Your thoughts on next year, because it's no longer a surprise if this market doesn't do well this year. Everybody talks about issues in Europe, little interest really locally. But looking further ahead, what for you are the key risks going into next year that might just set the tone for the year?
I think the key risks are something has to be done about the stockbrokers. The stockbrokers are being basically, a lot of them are in trouble, and they're asking for palliatives for the market. Until that is sorted out, you're not going to have that drive for domestic demand, and the market is not going to have a sustainable rally until you can have domestic demand.
But let's look at some of the macro issues as well. What about the Naira? Obviously, that has been a big topic over the last few months. We've seen a lot of volatility there. The CBN stepping in to come out with the policy move and move the midpoint of their target range for the Naira to 155 from 150. What are your thoughts on that? Is that a major risk going into next year? Do you think they will get a handle on this exchange rate?
I think if you look at if some of the reforms the government wants to bring in next year, such as removal of petroleum subsidy, other structural reforms, that should help with the Naira. Because the Naira is really about structural inefficiencies in the Nigerian economy. But anyway, the valuation of the Naira only affects foreign investors. Domestic demand is not attenuated by moves in the Naira. Until we get a handle on domestic demand and get that back into the market, we're not going to have a sustainable rally.
You mentioned this fuel subsidies, and it's widely expected that will be removed in January. But what are your thoughts? Do you think they're going to go through with it? It's obviously a big social issue here.
I think they have to do it. I think they will. There'll be short-term pain, but it's up to the government to show that the savings from the fuel subsidy are used to, people can see what's been done with the money, such as improved infrastructure, and improved, especially in transport, roads, various other things, so people can see where the money is going. But I think it has to be done.
Obviously, there is very little in terms of news, in terms of corporate news and results. The market is it's quiet right now. But going forward, what are the possible catalysts? There's a lot of reform going on with regards to securities lending. That might open up opportunities for some speculative activity with short selling. There are new listings expected next year. What are your thoughts on the other catalysts that might just be out there?
I think something that's really topical is moves to compel telecom companies and oil companies to list on the Nigerian Stock Exchange. If that's done next year, that would be a big fillip for the market. I think if you look at the petroleum subsidy, there are a number of listed petroleum marketing companies that have, according to the list released recently by the Senate, have received a lot of the inflows from this petroleum subsidy. Now, if that is stopped, how's that going to affect their bottom line? I think that will be another catalyst for next year. I think on the whole, if they can address the stockbroker problem and we can get the domestic demand back into the market, that will be the biggest catalyst of all.
Okay, let's run through some news flow concerning Union Bank. Now, this is one of the banks that was rescued in a $4 billion bailout in 2009, but everybody thought it was all over with plans for the Africa Capital Alliance Consortium to invest in that company. Now we're hearing that some investors have not brought the money to the table. That might be slowing down things, then AMCON may have to step in. What are you making of this news?
To be honest, it's not really that surprising. We have, the consortium is always made of international investors. So if some investors have found out because of what's happening in their home markets, they're unable to follow through, it's not much of a surprise. But I think most of these are rumors. There's no confirmation. I think we have to wait to see. I think it's important to see whether they call the EGM or AGM to push the transaction forward. But I think overall, if there is a problem, I think AMCON or CBN will step in.
Looking into next year, all things considered, back to the equity market now, everybody has talked a lot about the banks, that the value is very good there. What are your thoughts on where we should be investing if we are going to equities at all?
I'm still looking at consumer products. I mean, the banks, people talk about the banks and they're undervalued. I think yes. I think with the clean up of the balance sheets and move to more lending in the real sector, you will see an increase there. But until you can have sustainable consumer loans, mortgages, and proper mass retail banking in Nigeria, I can't really see that much growth in the Nigerian banking sector. In terms of consumables, the fast-moving sector, breweries, companies like UAC, they'll continue to show, and Nestle, Nigeria, they're going to show strong growth. The demand is there. Nigeria has a population. Nigeria has shown it has demand, even in this time. I think there was this strong growth in those areas.
You mentioned the banks, and let's come back to that. Obviously, with the higher interest rate environment, the risk of loan delinquency increases. I mean, I read some headlines concerning that coming out of Kenya recently, and many analysts beginning to come out of bank stocks just because of the massive interest rate hikes we've seen in Kenya. Going into next year, if we do see further hikes, perhaps maybe with the central bank trying to defend the naira, what's the prospect for the banking sector? I
think it's twofold. I think there's one, there's refinance risk. The higher the interest rates, then companies have to refinance a lot of their debt and their loans might have a problem in doing that. So the banks could have some problems in that sense. I think secondly, for the banks, is that the growth in credit will slow down. Because when you start having high double-digit interest rates, it doesn't make sense for a company to borrow. And so if the banks are not lending, they can't make money, or they don't make as much money as they would have if they lend more. So I think those are the kind of risks the banks have to look at.